The most important part of every trader's lifetime is the first 15 minutes of market open. And if you master that, you will master the market direction for the rest of that entire session. Find your trade, find your buys, and have a repeatable process that you can use every single day. And not only that, you need to have a simple system that makes it easy for you to find entry and for you to place that trade without any hesitation. The reason 90% of traders actually lose is because their strategy has too many moving parts, too much guesswork, too much opinionated thoughts that have no real reason to be brought into the market. However, if you can have a system that is mainly focused on the two main moving parts, you can both identify what is wrong and what is right, what brings you the most amount of money, and then scale in on that. That is how traders grow, and that is how they improve. So in today's video, I'm going to give you guys my two-step simple equation that is silly but makes me money. And I'll show you guys live trades we took yesterday with the live trading community, and we also want to access that. That will be in the link in the description. But now enjoy this full comprehensive lesson. Now, this one simple equation that makes me $500 a day lies down to my two simple moving parts, which is my 4-hour candle close and my 15-minute opening range. You want to use two of these main systems, which I've already made videos on, but I'm going to show you guys a combination of how I used daily in my live trading, in my live streams, day to day. Now, firstly, the prior candle sits along the bias of the day. If it's a very impulsive candle, you can expect that you will have a continuative market session. And this will be further confirmed by your opening range. If your opening range follows the alignment of that prior 4-hour candle, so for instance, this is a very impulsive bullish candle, and we also have our opening range pushing above that high point, showing us bullish intention. From that point, those two simple moving parts already show you that for the rest of the New York session, you will have an expansive bullish move. So your obvious thought should be buying all the way. No guesswork, no complicated bias setting of prior highs, of trend lines, of various liquidity points. Just two simple levels laid out by the market on a silver platter that you can take advantage of. Now let's delve into both of these two systems. Now, with your candle close, this will be used as your higher time frame, and then your opening range will be used for your lower time frame when you're getting into those entries. This is the time frame alignment that we'll be extending on throughout this video. And once again, just to reiterate, I know I've already made videos on this, but just to revise on it, your candle close works in impulsive continuation markets. Once price makes a certain candle close, you can expect that the next candle will follow the same trend of the prior candle. So if it's bullish here, closing above the high point, expect the next candle to be bullish, closing above the prior high point. We're just following the story of the market. And your opening range, it is the candle that is dependent specifically on the market opening. So for the New York Stock Exchange, 9:30 will be the open. That is Eastern Standard Time. And then for London, that would be 3 o'clock. You mark out that 15-minute candle at that exact hour, extending the highs and the lows, and that is your opening range. Now, once again, if we have price closing above high points consistently, we know this is more of an impulsive continuative market. And we're mainly using this on our 4-hour time frame. We can then extend this idea onto our more recent candles. So our prior candle, we're looking for this high to get extended above, but we want to buy under the candle close. Why? Because as you can see, this candle closes here. The next candle opens at the exact same area. It makes a wick below that area. The wick is the most important part. That is where we're looking to buy and trade the entire movement upward. Once again, we're buying under the previous candle close to trade that entire movement to the upside. Once again, PCC stands for previous candle close, and then CIT is candle impulse theory. I've already made numerous videos on this, so I'll also link them above. Now let's actually understand the candle anatomy. So we see the high time frame candle to lower time frame movement. So once again, this prior candle does make up its own independent range. As you can see, it opens up very slow, just like price igniting, starting off the engine. We then make the low, which is a very strong bearish movement, and then we make the massive distribution. This area is where you are now exiting out your trades, or the trades where you're running in profit. Lastly, as that candle starts to close at the end of the hour, we then start to see that we lose that momentum, we lose that volatility, and then we start to consolidate again. And that consolidation translates into the next candle. Once again, the next candle starts off with this slow opening, first bearish movement. As you can see, it's a certain pattern that the market is following. And now it's very important to understand, as we dip below that previous candle close and open the new candle, this is ideally where we're looking to enter. And usually this lower time frame candle will act as your opening range, where price breaks out of that and then you trading the movement to the upside where this candle is starting to distribute. Okay. And then once again, as you start to get to the close of that current hour, we then lose volatility, the market slows down, and then it is then followed along again. Once again, your ideal entry zone is below the close. Now, the second way of trading this is to get more refinement by not just focusing on the candle close. Obviously, this is where you'd want to start to sell off from, but now using your Fibonacci to get the ideal zones and optimum zones of where you'd like to sell from. Now, the most common one is your previous candle equilibrium, PCE. That would be just the 50% or middle of that candle range, where you see that the wick now extends to this area and then we start to distribute. Usually you want to be between the 25 to 50% area. Okay, so just this lower quarter. Anything above this, this is what we would consider a deep retracement. And in a very impulsive market, you do not want deep retracements. You want quick pullbacks and then very strong impulses. That is how price continues with that momentum. A deep retracement would mean loss of momentum and then introduction to the sellers or the buyers of the opposing nature. Once again, this you can high, candle low, you're buying above, you're buying below the previous candle close, and for a sell, you're selling above the previous candle close. I do want to make this very known to you guys. And these will be our 4 hour candles, okay? The prior ones. Now, as you can see, this is what the lower time frame will look when we are comparing the two. Once again, this is just coming to that 50%. Anything more than that, maybe going to the 75% of this range, that would be overextended and that would make the trade idea invalidated. This is more so a price wanting to start a reversal instead, and we do not want to be part of that. We just want to trade a simple continuation that we can very easily have an entry for. Now let's delve into the opening range strategy. Now there are 2 types of way that your opening range can occur. Now, one side is the more simpler side and the other one is a lot more manipulative, and this does really show the nature of the market. Now, our first one is the breakout, where simply if price goes above that opening range, you're looking to buy and continue the move as price rebalances of a fair value gap or order block. Anything that is within a good news for a buying potential. And if you see that price tries to break out but then fails to do so, meaning it closes back into the range here, this is more so what we call a fake out. We're just trying to get in the FOMO traders and then they start to reverse back down the market. This is more so driven by institutions. A lot of the time, it is the more expected move just because of how manipulative market open is. It's always trying to trap in the newer traders who are just trying to make a quick buck, get them out their positions, and then the real move finally starts to happen, which follows along for the main session. But I also make sure that you guys understand how to trade this so you're a lot more adaptable and nimble within the market. Now, how does this specifically work? Firstly, the opening candle of New York session or the opening candle of London session, that will make out your opening range candle. For New York, that is 9:30. So this is a 50-minute candle opening and closing at 9:30. Mark at that high and that low, and this is your extended range. For London, that would be 3 o'clock, 50-minute time frame, high and low. That is your opening range. Now, the 2 ways to trade this, once again, is when price breaks above, rebalances at the high, and then continues upward. The opposing would be bearish, where price closes below the low, retraces, and then starts to push back down. The next one is the more institutional one, where price fakes out the move, where it tries to break out but fails to do so and closes back into that range. This now actually becomes our CRT, which you would have learned extensively from the Nova Legacy. So once again, this is where price starts to reverse, and then you trade that movement. Or if price comes to the lows, wick rejects off the low points, closes back into the range, you are then trading that reversal. Now, once again, here's an example of this. This is our opening hour, so this would be like 9 o'clock EST. Our opening half would be then from the 30-minute time frame, mainly focusing on the 9:30, and then the 15-minute, where it's the first 15-minute at 9:30 candle. And this also falls into your opening hours. This also falls into your opening range. Now, it's also very important to understand that different opening ranges on different time frames do not equal one another. This could be the 9:30 candle on the 30-minute time frame. A lot more volume is shown within that. But then if you go down to the 15-minute, it then shrinks down because it has to show you 2 more candles. This is the candle that opens at 9:30. So this would be your 15-minute opening range, not this high and low, this high and this low. The 5-minute, once again, that gets refined. First 5-minute candle at 9:30, the high and the low. If price breaks above, you're trading the movement upward. As you can see, different opening ranges give you different results. It is just dependent on what type of trader you are. And for us, we mainly going to be focusing on the 15-minute RB. Now, here's an example of this. Here's our 15-minute orb. We mark out that high and that low point. As you can see, price immediately breaks out. From this, we can see that our intention for this session is a lot more bullish. We then extend this fair value gap that actually falls in alignment with our orb high. And then we just enter off that rebalancing, targeting higher prices. Now, this is an example where price tries to close above but fails to do so, leaves a major wick, then closes back to the range. This already should notice to you and signal off that this is a manipulative day. Here we're doing reverse instead of continuation. So I know I have to trade my opening range or orb CRT. And that is why you trade the reversal back down. Very simple. You are moving with the market. Okay. Now let's look at this example. Remember, we're combining our 2 main systems we've learned along the way. So this is my previous 4-hour candle. As you can see, 4 hours. There's the high. There is the low. We then mark out our opening candle. So for us, for the session, the opening candle would be the 5 o'clock candle. You mark that out on the 15-minute time frame. I'll also show you guys an example where we use this on the newer candle as well. But for my more earlier traders, this is for you guys. So now, as you can see, this is still the... Now, one thing you also have to notice is that here is our prior candle close. As you can see, this is the 1 o'clock candle close, and then the new 5 o'clock candle opens at that exact same area. And now what's even more important is that our 50-minute orb actually falls in alignment with this candle open and close, which is extremely important. Because now what that means is that we have retraced into the candle closing price, as you can see right there. There's our first retracement of that wick. There is our first retracement of that candle right over there. And then we start to break above, close above our opening range right there. That is a positive entry signal. Now we have bullishness on the high time frame candles and bullishness on the lower time frame. Once again, 2 simple steps equates to a very simple entry. You enter your trade right over there, you place your stop loss very close to the opening range low, and then you just target higher prices. And as you can see, at the end of the day, for this entire market session, it all followed the bullishness that was already set at the first 15 minutes of that session. Once again, there's our opening range candle on the 50-minute time frame. There's our close and open, same area. We wicked down, we then went bullish. And once again, here's the 4-hour view of this. There is our high, our low, and as you can see, we just come into the 25%, which I said was the ideal area. We want a very short retracement because, as you can see, literally all our 4 hour candles showing us that bullishness, and we're just following that. Very short wicks and a lot of bullishness. That is the ideal market you want to be trading this within. Now let's head into some examples we took this week. Now to actually trade this 15-minute opening range, you need a broker that can actually keep up. And that is where Moomoo, a powerful trading platform that is meant for serious traders just like us, finally comes in. And Moomoo isn't just another brokerage. They are the proud sponsor of the New York Mets. And they have 0 commissions on stocks, EFTs, options. So that means you keep whatever you earn. You've got pro level tools like the book trader, hotkeys, and no code algo trading, paired with lightning fast execution, and that's perfect for scalpers and especially fast moving strategies like the one you're learning today. Plus, Moomoo gives you free level 2 and NASDAQ total view price data, as well as powerful charting tools and even customizable multi-chart layouts with built-in alerts and powerful insights to find those high probability setups. And if you're new, you'll get up to 60 free stocks with a qualifying deposit and earn up to 8.1% on your uninvested cash for the first 3 months. Use the link in my description to get started with Moomoo. It is the platform I trust and use to trade smarter every session. A 9:30 candle. Why? Because that is when the New York Stock Exchange opens. So I'm going to put out this little vertical line here. You can see there it aligns to 9:30. Push price forward. Let price do its thing. And already from here, the onset where I see pre-market is very bullish. What I'm already thinking right now with a bit more of experience is that this is FOMO candles. They're just trying to get in early buys, all the intermediate and beginner traders who are just looking at these 3 bullish candles. They're immediately thinking into buying here. But the main thing is that with this, simply, we are focusing on that opening range. And this is a mistake I used to make a lot in my trading, but this is what really refined it, those first 15 minutes. So this candle has just closed. We will now mark the high point and low of this candle. So let's make this color red here. There you go. And then just to make it a lot more clear, let's just make a little box around this candle. There we go. There's our opening range box there. So very good. Now, we want to hop down to the 5-minute time frame here, or actually the 3 minutes, to really look at how price reacts here. So firsthand, I want to make known to you guys that this little blue line shows us that we are currently at the 25% of this current retracement. So here is this massive bearish pre-market move. And we have this little nice retracement. That is what we want. So price can continue the momentum to the downside. So that being said, we want to then also look for price to either fake out our opening range high point, so go above here, then sweep lower, or simply break out lower, then we can take the movement downward. So we're going to really watch what price does here. Okay, so immediately we wick above that high point. Do we close above? No, so we have not broken out of our opening range. What does the next candle do? It, okay, goes above here. Do we retest this high point yet? So we start to push off of there. Do we get another bullish candle? No, we do not. So as you can see there, we're very patient with this. We're watching what price is giving us. What we would want for a breakout would be, once again, those massive bullish candles, which we do not get. Instead, we get a very tiny indecisive move and then a massive bearish movement right after that. Quite simply, that is our CRT opening range. So we're going to actually place a sell right off of this. Stops above the high point. Nice and simple. And then with our TP, we can actually just target the low of our prior 4-hour candle. So if I just go over here, once again, this is an entire range that price is pushing down towards now. So placing our sell there, stop loss at the highs, TP at the lows. Now there's one more thing that we need to look into. the volumetric info. Now, this just gives us that extra conviction and that extra little confluence that a lot of traders do not look into. Everyone can draw the order block or fair value gap, but no one can actually really see how much volume is at each individual zone. And right from this chart, I'm already seeing this. Once again, this is the Flux Charts Price Action Toolkit. If you guys also want access to this, I've already lit everything in the link in the description. There's no affiliate links. It's just simply the link is there in the description. So as you can see, it does show us there's an order block right over here. I didn't even notice this the first time, but as you can see that the volume at that is around 9,000. The next one is 4,000, and the volume share at each zone is 14%, 32%, and literally from all of this, it's all showing me bearish signs. Even the market share, from bullishness to bearishness is overwhelmingly having a bearish difference. That is what you want to see if you're going for a bearish trade. So that also aligning with us. We are now fully confirmed with our entry, and quite simply 2 steps for our candle close, 15-minute opening range, you enter your trade. And as you can see very quickly, from those first 15 minutes of the market open, right over here, right over there, our first 15 minutes of the market open, it already showed us that there was going to be a fake out. And from that, we then follow that bearish incentive. Quite simply, we are in and we are out of our trade. And as you can see, there is the little retracement that you're looking for. If I had noticed this a lot more early into my trading career, I would have a much simpler journey, but all those losses always accumulate to newer experiences that I can always give off to you guys in this video, which is why I enjoy doing this. So your goal is to take advantage of my losses and mistakes I made in the past, learn from them, and use it to improve your trading journey, shortening your learning curve, shortening your path to success. Let's go over one more example. Now I know there's been a question ringing in your ear for all the introspective learners. What if I don't have a very impulsive 4-hour candle and it's more so a ranging market? That is a very valid question because the market is not always going to be impulsive. There'll be consolidation phases. And with that, what you want to do then is focus on the prior 4-hour candles high and low point instead. Because within these ranging markets, what is key to understand that price will always try to make reversals. And they will always occur from these highs to these lows. So we're going to outline this box. This is going to be our range for the day. We then want to go down to the lower time frame, the 15-minute. Now, once again, I've already made numerous videos on the CRT, but just to quickly recap, with your CRT range, simply once price comes to a certain 4-hour candle low point, you want to look for that bounce back up immediately and then trade the reversal. Or if price instead goes to the highs first, you're expecting, just like in a range, for price to reverse back down to the lows. Very simple. Now, where's our 930 candle? It would occur from right over there. So we want to push price towards that. So here we go. Firstly, very massive manipulative 4-hour candle, a very manipulative 50-minute candle. This is the manipulation side where I speak of that the market can present. And this is actually NQ here, NASDAQ, market opening 930, you have a massive manipulation candle. So what you want to do is you mark out that manipulation candle. And for these days, I want to show you guys every side of the market that you can experience. It will not always be picture perfect, but you still want to stick to those simple tools that I gave to you guys. You mark out that 15-minute candle high and low. So right here, the high point, let's make this one black. And you can see that it actually extends above the CRT. But what have we learned about the CRT? As we said, if price breaks above, like it did over here, it will immediately look to come back to the lows, which it did. It came back to the lows. But now what happens with where we are? I'm going to give you guys a quick second to think about that. Very well done. As some of you guys would have said, that since price at the lows now, we can look for price to go back up towards the highs. That's how a range works. It bounces between those two levels. So that being said, we can now expect price to come back up to those highs. So we're going to just wait for that to happen on our 3-minute time frame. So once again, quick time frame alignment, 4 hour, 15, 4 hour, 15 minutes, and then 3 minutes for your entry. And what can we see on our 3-minute time frame? We immediately wick the opening range. Where's our opening range? From this 15-minute high point to low point. This is our opening range. What do? We came below it and we close back in that range. So what are we doing in this case now, guys? We're trading the fake out once again. And as I said, it's very common to do this because of how manipulative market open is. They don't make it easy, but I'm showing you guys the procedure that they use. This is how the institutions trap other traders. And this is how you guys are going to be on the side of those major market manipulators. So there you go. That's when you'd want to actually put up your SL right below those lows and then TP at the highs. Now, you can wait for, if you still feel a bit less confident, you can wait for a few candles to print out to show you, okay, yeah, we are getting that bullishness. As you can see, price already printing up bullish from this. Now, at this point, you can still enter your trade. So right over here, this is actually roundabout where we got in on the live stream. We did get in a bit later than usual, but it's still okay because if you actually pull out our flux chart price action toolkit here, what are we just sitting above here? We are lying at a very high volume FEG plus IFEG, okay? Here's our inverse fair value gap. There's our fair value gap. Very strong area that has over 12,000 market share volume at that area. So that being said, that is also more confirmed into our entry here. Don't need to rush because the market will come to us. So there we go. We're entering our trade here. And then we're just targeting for higher prices. And we actually pull out the entry screen that I sent out to the members. And also the trading is actually fully done. There we go. And for the rest of the day, what happens is price is overwhelmingly bullish. And how was that created? It was created from that first market manipulation. Went bearish, got in all the former sellers, made everyone lose and blow their accounts, and then it finally flipped over and showed you the real intention, which is bullishness. If you guys can understand this simple market analogy, follow the 4-hour candle close, follow your opening range, which sets out the direction for the day, you will see a lot more consistency and simplicity in your trading. Now, hopefully, guys, you guys gain clarity from this session. If not, you're always free to book a free call with me, my team, which will be in the first link in the description, or join our waitlist to be part of my candle mechanics full learning. Join the waitlist to be part of my candle mechanics masterclass, which I go into the CIT, the CRT, understanding candlestick methodologies, so you can really fully gain back control of your trading. And I'll see you guys in the next video. Please go watch the video on the daily candle close as well and the previous high and low point if you guys want to really master your bias.